Hey guys, good afternoon. This is George Smith, Managing Broker of Managed Real Estate Advisors. Today we have the privilege of interviewing Francisco Giron with JCOG Financial. Thanks for coming on the show, man.
Good to be here. Appreciate the invite, and I admire all that you do.
Good, good. So I want to go ahead and touch up on a couple of things that, I deal on a day-to-day basis with a lot of my clients. One of them being the end user and the investor. They're two completely different clients, right? On financing a property, when they're going to go ahead and buy one, the end user is completely different from the investor. Yeah. Explain to us the difference in both of them, or what your experience is in dealing with the end user against the investor.
So absolutely, man, and that's a great subject. When we find clients that are looking to borrow to buy their own operating spaces, you got to consider the fact that the company that is going to be operating or occupying the majority of the space is the company that is going to be responsible for paying or responsible for that loan, for the repayment of that particular loan. So when it comes to underwriting that type of transaction, the banks are going to look at the strength of that particular company that is going to be using that space. And that transaction is called owner-occupied transaction. When we look at that type of transaction, you have different avenues of financing, but the core underwriting criteria for that type of client is going to be, number one, the income that the operation generates, right? Number two, the level of liquidity that that operation has, and number three is going to be the collateral.
Okay, so let's go back to that real quick. One is the liquidity of the business owner of the business, the operation.
The income from the operations.
The income from the operations.
Correct.
Two is the liquidity of that business.
Correct.
And then three, what's the collateral,
It's
right?
going to be the collateral, correct.
Okay.
Now, when we talk about an investment transaction, we kind of have the universe of options for that type of transaction, because now we're looking at type of asset as a primary source of where we're going to generate income from. When we talk about, for example, multifamily, right? We're underwriting the building, the number of units, the quality of management that the building has had, right? When we talk about retail, we're looking at the quality of the tenants. We're looking at the type of industry that each tenant has. So the underwriting criteria for that particular type of transaction becomes the actual property and what the property is being used for. In this case, the repayment is going to be the quality of the tenants and the income that property is producing.
So let's give you a perfect example. You said a couple of things there that were very key. Let's go back to multifamily. Multifamily, so you look at the quality of the building,
correct,
right? You look at the income of the building.
Absolutely, yeah. The occupancy, very important.
And the occupancy.
Percent
And you also mentioned management.
Absolutely, yeah.
The management company of that specific property.
Correct.
So those are three or four specific or main points in financing one of these investment deals?
Yeah. And I think that a lot of times what I see when it comes to underwriting this type of asset is that you find that a lot of investors that, for example, when we're talking about smaller scale multifamily type of product, a lot of the investors that acquire this type of assets, they come from the residential world. So they're used to managing residential properties, condos, whatnot. But when they transition to multifamily, a lot of times they're not experienced in the process of managing this type of assets. So that's why a lot of times it's important to kind of have a good management company to give you guidance, or even hire and put that as a part of the expense of operating that asset.
Good. No, that's very good. Anything you want to add in there regarding any other different type of asset? You mentioned also retail, and you also, I'm not sure if you mentioned industrial.
Industrial is one of my favorite assets. I know it's one of yours as well. I love industrial because of the component of operating with small business companies and export. A lot of exports that we see here in distribution that we see in South Florida. When it comes to investing in industrial property, I think we have to be careful as to the same concept when it comes to retail, but the quality of the tenancy. A lot of times, I had a situation where we had a cannabis business operating out of the building. Very strong sponsor, excellent income from other sources, excellent credit, good liquidity. But unfortunately, the particular bank that he was working with at that time did not have an appetite to finance properties that were involved in this type of industry, or that had tenants that are involved in this type of industry. As licensed and legal as it might be, they simply didn't have an appetite for that. So
Yeah, I bumped into that scenario many times on a cannabis dispensary
yeah,
company.
absolutely, yeah.
I mean, they seemed very financially stable and strong, and the landlord was even willing to accept them in as a tenant. But the landlord's bank
Yeah,
was not accepting it.
yeah.
It's more on the, I believe, it's probably more on the federal
Yeah, I think
level that banks are not accepting these type of.
I don't think it's a matter of that. I mean, a lot of times when we think about banking system, they're very focused on the reputation, and there's something called the reputational risk when you underwrite a commercial property, right? That the bank doesn't want to get involved in something that it might damage their reputation. So a lot of banks, they're still haven't gotten used to this industry, which is now legalized in many states. So I think at the end of the day, it's a matter of knowing what type of bank has that type of program and working with a person that can underwrite the deal for you, that has the experience doing that in order to have a successful transaction, so you don't waste your time. A lot of times, what I find, and this, I'll tell you this, George, regardless of the size of the company, a lot of business owners make one mistake. They start their operations, they grow their investments, or their investors, they start buying small little properties and whatnot, and then they grow their portfolios, they grow their businesses, and they get to a point where all of a sudden they have also outgrown their bank at the retail branch that they used to go. All of a sudden, that particular location can no longer fulfill the needs, the lending needs that they may have. So now what they don't realize is there are different departments within the bank that can help them underwrite those transactions that they have. And what
Wait,
happens,
so hold on. So you're saying that the company will outgrow
the branch,
the
absolutely.
needs or the requirements that bank can handle on that specific company?
Not particularly the bank, but a lot of the times it's the branch, because they start working with the branch at the branch level, and as they grow their business, they don't scale up to different segments and departments that a lot of banks have. And they're used to working at the retail level. Remember, when a company starts, it's considered a small business. Or when an investor starts buying properties, maybe it could be residential, they start working with a mortgage loan originator, residential mortgage loan originator. But as they start scaling their investments, and also we're looking at multifamilies, 10 units, 20 units, 50 units, that same person that was doing the loan for them may not be qualified to be able to meet the requirements of that particular transaction. So at that point in time, that's where a good advisor comes into place to be able to guide the client in the right direction.
Interesting. With that, I want to go ahead and transition into asking you about the importance of working with a mortgage broker like yourself, a commercial mortgage broker like yourself, versus a traditional bank. Let's say both on the end user versus the investor.
Absolutely, yeah.
What are the options?
So I actually get that question a lot. And, as you know, I was a banker for 16 years, and, I was in commercial bank, worked with a lot of, top brands out there, Bank of America, Wells Fargo's of the world, HSBCs. And one of the things that I was always struggling with is the fact that while I work for an institution, I'm limited to the programs and the products that financial institution offers. What I mean by that is that I was not able to facilitate my clients with the universe of options that all this bunch of banks offer, not only in the state, but throughout the country.
Right.
Just so you know, I don't know if you know this fact, but there's over 250 banks just in Brickell Corridor in Miami. Just in
That's
Brickell.
the financial.
Exactly. It's the financial capital of South Florida. So how do you truly get to each one of them? And you really don't have to have all the banks, but you have to know how to underwrite the deal so you present it to the right bank. I think that the value that a good broker, a broker that understands underwriting, a broker that understands how to read financials, a broker that has experience underwriting and closing commercial mortgages, is the fact that the client's not going to be limited to a particular financial institution, a particular bank, and can truly find value in the guidance of an advisor that can bring to the table solutions related to the needs of that particular scenario. Right? So another thing also is that, you may run into a situation where a particular bank you have a relationship with, you may have, $1 million, $2 million with a bank, but that particular bank doesn't offer investment type of mortgage, right?
I ran into these scenarios myself.
Yeah.
I mean, I have clients that, they're they're saying, well, this is my bank. I have, I bank with them for many years,
Yeah, you have all
and they're
this
trying to
money.
they're trying to buy a building
Yeah.
with me, and I always say, you got to talk to Francisco.
Yeah, and I appreciate that, George. And the experience there is pretty much, I love relationships. So if a client runs into that, I always let them know, listen, let's not get upset with the banker, because truly he's working for the bank. You have a great relationship with them. They help you with the deposits, maybe treasury services, which a lot of companies have a need for. They've been able to finance your unoccupied building, right? But now all of a sudden you're starting to invest in real estate and they cannot fund that transaction. It's okay. That's why there's so many banks out there that we can leverage, right? And maximize the benefits that other banks can give you without jeopardizing that relationship that you build over so many years.
Yeah, because that bank only has specific guidelines
Exactly.
for specific
Exactly.
types of deals.
Exactly. You don't leave your wife just because she didn't cook you a nice dinner, So that's kind of like what happens with the banks. But overall, I think you gotta also keep in mind that nowadays, if you notice, right, a lot of bankers are transitioning from one bank to the other, and there's a sense of like how do you call it? They're not too loyal to employers nowadays, because every bank is trying to get the good players out there and they're knocking on their doors. So I think at the end of the day, you have to be flexible in your banking relationship these days, because there's so many options out there. You cannot just be married to a particular bank because you're stuck in saying that, if they don't do the loan, I'm not going to buy the property. There's opportunities out there. So you got to be flexible with that. Have your primary bank, have the bank that you have a relationship with, but when it comes to lending, you have to be flexible. At the end of the day, it all boils down to the program and the structure of that particular loan.
Now, the main worry about, and I get it from my end, from a lot of my clients, is that, if I go with a mortgage lender or commercial lender, I'm going to get charged more points. I'm going to have to pay more.
Okay.
What do you respond to that?
That's a very simple question. If you're going with the right advisor, the right mortgage broker, he's going to save you money. That's the whole point of using a broker, is to save you money. How can an advisor, a mortgage advisor, save you money? Number one, by understanding how to underwrite your situation, your financial situation, and everything that has to do with that particular transaction, right? How do they save you money? Number one, a lot of programs out there, and we have it, at Jacob Financial, we actually work with a lot of lenders that when we underwrite our deals, we get compensated by the bank and not by the client. Okay, that's number one. Number two, a lot of times we offer a program now that we can serve as consultants for the client, where we don't have to pretty much originate the loan, and we can simply go ahead and do a loan review. So you can take that particular file to the bank of your choice, and you submit the deal to the bank directly, but with a guarantee that you understand, and you have a good understanding as to what is the likelihood of getting approved for that transaction. And pretty much when it comes to lending, the banks have spreads that they have to meet, right? Minimum spreads that they have to meet depending on the level of risk that particular transaction has. So where does a good advisor come in being able to negotiate that risk for you and understanding what are the parameters and the limitations of that bank in order to be able to negotiate that type of risk in order to save you money, whether it is on the rate or the origination. Our fees, standard fees, just to kind of throw it out there because I don't mind making it public, is on average, depending on the size of the deal, is 1% all in. Meaning whether we have to charge the client or whether the banks pay us, that's our average origination fee. Okay. So we're pretty straightforward. We one of the things that that I see a lot, and this is based on brokers. I get a lot of calls, believe it or not, from mortgage brokers that have been doing a lot of residential business. A lot of them, they're used to charging fees maybe on private loans and all these type of products out there that are available for residential transactions, right? And they don't understand how to underwrite a commercial loan and what are the things that make or break a deal on a commercial transaction. Sure. As you know, when an investor buys an asset, they're looking at return. So if the cost of the loan is too expensive, you're killing a portion of that return. So our job as advisors is to make profitable as profitable as we can that deal for the client. Sure. So at that point, you got to understand that if the person doesn't know what they're doing or they don't have the experience underwriting commercial real estate, they're not the right person to be dealing with, and they're not commercial mortgage advisors. So one of the tips that I give clients, if they're in different states or someone and somewhere else is watching and they're working with someone, if they don't have the background to underwrite deals, commercial deals, that's not the right person for you to be working with. And if they're charging you an excessive amount of money, that's not the person to be working with. That's
Yeah, definitely. Always look for the expert.
Expert.
Find the expert at what they do best and hire them.
Absolutely.
Now, let's wrap this up with the last question. Clients, I get a lot of clients that are ready to go ahead and buy a property. What do you suggest for them to do? What steps to follow to have a successful process in purchasing or financing that deal?
the advice is pretty much always the same. The minute that you decide that you're going to get involved in real estate investing, the minute that you decide that your company is ready to go to the next step of acquiring your own space, that is the time you need to start looking for the financing. Don't wait until you find the right property to start working on the back end, all the documentation, the analysis, and understand where you stand financially for that transaction. What happens a lot of times that people say, well, I haven't found the property, so I'm not ready to start working on the information that the bank or the lender may need for that particular transaction.
All right, so just so I understand you right, seek a financial commercial lender or a broker, mortgage broker, and see what you qualify for, right?
Absolutely.
See where you're at before
Way
you even
before.
start to look for the property, before you start spinning wheels. Speak to them and see what you qualify for before you even start the process.
And one thing I'll tell you, man, they have to be realistic. A lot of times, when we talk about liquidity requirements, so 3 components, just to reiterate, we have the income, right, requirement, whether it is from operations or rental income. Then we have the liquidity component, right, which is the portion of the money that is going to be required for the down payment, right, closing costs, and whatever reserve requirements that transaction may have. Okay? And number 3, the collateral. So what I mean by being realistic is that, for example, you have great income, but you have no liquidity, you don't have enough money to buy the property, to give the down payment, you're not going to be able to qualify for that. So even if you have the income, right, you're going to have to adjust your transaction, your purchase, to whatever liquidity component you have that is going to be able to meet that requirement.
Sure.
So you have to play with those, you have to understand that and be realistic.
Those 3 components.
That's extremely important.
Definitely, definitely. Well, Francisco, thank you for being on the show.
Thank you very
If
much.
you guys want to contact Francisco Giron, his information is going to be right here below, his number and his email. You can go ahead and reach out to him directly. Thank you.